The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business. From $3 million to $30 million in just 12 months. Brought to you by the Masters in Real Estate Marketing, Arter SEO.
Hello and welcome back to the Icons of Real Estate podcast. I'm your host, Timothy Kaitana, and today I have a special guest. Well, this man is a professional, and I would say he's a trailblazer in the real estate industry, and he has something to teach you today. And I believe he has an amazing story that is definitely going to change the trajectory of your real estate career. Well, who am I talking about? I'm talking about Irwin Boris. Irwin, welcome to the Icons of Real Estate podcast, man.
Thank you for having me, Timothy. Thank you.
All right, all right. I mean, thank you so much for, taking the time to be with us today. Irwin, I know that a lot of our listeners probably don't know who you are. Could you tell us who is Irwin Boris and tell us how did you get into real estate investment?
Sure, my pleasure. Irwin Boris, Heritage Capital Group. We are a third-generation real estate family office with a real estate owner-operator syndication platform. How did I get into commercial real estate? That's a good question. I guess I went through college. I have an undergraduate degree in accounting, took the CPA exam, worked for an accounting firm that had a lot of real estate clients. Mm-hmm. And so I understood how the numbers worked, like most accountants do. It's just numbers. And I had enough of the numbers, and I had an opportunity to go work for, at that time, one of the largest owner-operators here in the New York area, the Lefrak family, and they taught me the management side of the business. They stuck me in a 5,000-unit apartment complex. I had to do everything from deal with federal and state agencies, go to landlord tenant court and see the games that some of the tenants were able to play, as well as deal in the process for why some of those numbers were what they were and how hard it really was to operate the business. Most people think to be fixed, and as you scale your portfolio, it can eat you alive, and that's why I tell people it's not that easy. And if you're going to invest in housing or multifamily, don't think that it's going to be all roses, because there's going to be a lot of thorns. And some people have been able to navigate it and grow large enough where they could hire a staff, and others, unfortunately, have not. But through my career, I've either worked for owner-operators, scaling platforms, or I've worked for lenders. So you as an investor really need to understand what you're asking for. Cash flow over internal rate of return, because cash flow, you need some extra cash, it's there. IRR, maybe, beyond your control. What we do here is we have three silos of capital. There's old family money that we've been reinvesting for years and growing that. We have institutional capital, where we have a single institutional capital partner, could be up to 80 or 90% of the capital, and they make the rules because they have the gold. And then we have more of a syndication platform with high net worths and other families who invest as limited partners on JV equity basis, who are looking for cash flow. So for us, it's all about the cash flow. If the cash flow is there, the IRR will be there, but I'm not modeling. If you look at all these syndicators, multifamily people that are struggling right now, it's kind of sad, because they were typically some of the highest bidders on apartment buildings as the prices continue to rise. And they outbid even some of the institutional investors. And to get the deals to work, all right, we're going to renovate them, we're going to push the rents, we hope to have a strong exit and a strong return. But they were willing to pay higher prices, and they used floating rate debt. They exposed their investors to interest rate risk. And now you look at a lot of the majors, and I don't want to mention any names, but you can find them on the internet. I don't want anyone to come after me, but absence of malice, it's the truth, it's public record. They were able to work their strategy. So now they're trying to figure out what to do. And of course, if you read all the investor letters they're sending out to their investors, they're blaming everybody and anybody on the market conditions except for their aggressive underwriting practices. So I guess, the chickens come home to roost, and unfortunately, there are people there that may lose some significant money, and that's really a lesson to be learned. And now some of them are actually out raising money on new funds, on preferred equity funds to save some of their own deals, so they don't face a foreclosure on their record and can't be financed as a sponsor anymore. And some are out raising new funds just to buy new deals and aren't even telling anybody. There's no mention of any deals in trouble. They hide those.
Wow. That is
so. Know your sponsor.
One of the things that I was really excited about is you sharing the knowledge that you have, because I believe a lot of people, I mean, you just said just now, know your sponsor. And for a person that's saying, hey, Irwin, how do I get to know my sponsor? How do I get to pick up all the red flags? I understand, as a man that's been in the industry for a while, you understand and you know all the red flags that a person should look out for, just to know that this is not the person you should be doing business with. What are some of the red flags to look for in a sponsor?
A sponsor should be able to provide, and I actually have a handout if people want to email me afterwards. I did a presentation at a family office where this was available. A sponsor due diligence checklist is going to give you an organizational chart of all their company and related entities. You want to know, are they the manager? Are they the repairman? How many ways are they in your pocket? They should be willing to provide a list and description of all material litigation, filed against the company, the principals, or key people for the last 10 years. And also in the references, you want to talk to some of the lenders. Of course, they're going to give you sample marketing material, schedule of call with the ownership, and how much these principals personally have invested in the deal. History of full cycle investments, good and bad. Everyone's got one or two bad ones. And they should also give you access to a data room where you can actually look at the information on the full cycle and really, if you so desired, do some due diligence to see if their returns are as represented. We have some institutional partners that require that. So we actually have a data room where we have a bunch of full cycle deals in there, and they check the calculations for whatever the IRR was. With the internet, you could actually look these people up online. You can put the name in of the sponsor and say ABC apartment owners and put in like loan defaults or trouble, or some of the stuff's even on Reddit these days. So you'd be surprised where you can find this information. And you got to ask point blank, do you have any deals that aren't paying? Have you suspended distributions? And first do your research online, so when you get an answer is untrue, you can call them out on it. Because it's going to be interesting. Investor relations is really a tough job right now in the market. And from time to time, I always look at what other sponsors are offering, because I want to see just how they're marketing it. And there's a very large social media personality who claims to have $4 billion of assets under management. And they said, hey, you want to invest in these apartment buildings we're buying? I said, sure, send me the information. I love to read this stuff. So here they're buying 3 apartment buildings in Houston from Alliance Residential, who's a dinosaur, a big player. They built the buildings. And the business plan was to take occupancy from 88, move rents 20%. And I said to their investor relations person, I said, well, if Alliance Residential couldn't do it, how are you going to do it? And the response was, well, we know what we're doing. And I'm like, well, first of all, I know that they don't manage themselves. They use third-party management. These are a very large owner-manager. And in my case, sometimes you get lost in the system, and it depends whether you have the A team or the B team managing the asset. But what really stuck in my mind was that I asked for the model, and they sent me a PDF. And I said, where's the model? I said, we sent it to you. I said, you sent me a PDF. I said, I'm looking for a live Excel model. Well, what do you need that for? Red flag. What do I need that for? I said, I need to really look at your assumptions because I want to stress them. I want to see, what kind of probability of a loss I have, especially when you're showing in year 3 a large cash out refinance, which I know is not happening. So I know that probably isn't happening. I don't know if they ever closed on them or not, but it's kind of scary when someone says to you, you don't need it. So you should always have access to a full data room. You should have access to all the due diligence, live time. Like if I'm ordering an engineering report or environmental report as an investor, you want to read it, go ahead. You may not understand it, but ask lots of questions. So you gotta protect yourself. And then I also think that when you look at 2010 through 2021, especially in the multifamily world, excuse me, it was very hard to screw up an apartment deal.
Yeah.
All the leaky boats got bailed out and came off the bottom of the ocean. It started to move up and interest rates moved out. You couldn't bail them out fast enough. So I think also early investors, say in 2010 through 2014, did less due diligence on every subsequent investment because they got lazy or they all worked out. So they figured, oh, how could I lose? Multifamily is the thing. But if you look at statistics, like in some markets, like Atlanta, it's hard to push rents. There's a lot of new construction. Phoenix, a lot of new construction. There's a lot of new construction everywhere. And then you also have to think, I have a W-2 job. How much can I afford for housing? And they're projecting to keep pushing rents. How do you move the rents? Every couple of years by $300 or $400 by renovating them. How many times can you replace kitchen cabinets? You should really look at what some of the underlying assumptions are, especially on multifamily, and figure out what's going to happen to insurance. Like insurance was a big surprise for a lot of people. We have one legacy apartment complex in Virginia Beach, and insurance went from $300 per apartment to $900 per apartment.
Ooh.
Yeah. So, and that happened to a lot of people. We have very little debt on the property, so we knew it was only temporary. So it's okay. We told our partners, here's what it is. The distributions will be cut back a little bit until we can solve for insurance. And this is a lot of high net worth people. They understand that because they're in other deals and they're seeing the same thing. It's a lot of the reinsurers pulled out of the market because of a lot of the losses from natural catastrophes over the last year. But that happens every few years. So if in a perfect storm, if your real estate taxes went up, your payroll costs we know went up, your insurance costs went up, and your interest rate cap expired, that was the end of the deal. That was like the perfect storm. And that's what we're seeing. And what we do is mostly double net and triple net investments. We invest for the cash flow, especially on industrial and logistics and flex.
Yeah.
So as those expenses increased, we didn't have to absorb those. The tenants did. And the funny thing is, we really didn't see a large insurance increase on that asset class. I don't know why. I'm not calling out the insurance companies and asking for it, but it worked well. Our investors are very happy. They're getting double-digit cash flow return. The upside is there. And the funny thing is, we say to our investors, we've had the asset 3 years, 4 years, 5 years. We expected the business plan was 5 years. What do you want to do? They said, no, we like 13% on our money. Let's not sell. Let's just we have term on the debt, or we can refinance. Let's continue to hold it. So every investor should be in that position where if you've gotten all your money returned through distributions, then you have no equity in there, you know what the baby's doing. So why throw the golden goose out just to try to find another investment where you might lose? Yeah. So that's another thing that people should look at. If the asset is performing and you've gotten your money out over the 4 or 5 year hold or close to it, you have to say, do we really want to sell? It's the devil versus the unknown devil on the next investment. So you really need to look at that. What is your long-term goal? To have a long-term passive income stream, or to take the money and figure out what to do with it next?
Wow. All right. Well, thank you. Thank you so much for that. One other thing that I want to find out from you is we definitely trying to educate a lot of investors out there. And what are your tips and advice for them? People want to see a better return on what they're investing in. And what's your tips and advice for people that want to get into investment?
People that want to get into investments, figure out how much you want to invest and what asset class you think you want to invest in, especially if it's real estate. Do you want something that might have more exposure to moving expenses like multifamily? I would say for now, stay away from office, stay away from retail. Look at what the sponsor's other assets are performing to look at that. and figure out what's more important to you. Is it the cash flow or trying to hit grand slam home runs with 25 IRRs at the back end where you have no control of any of the variables? So you should really be a little more cautious. I think at the beginning you should focus more on current cash flow, and then as you get those just quarterly distributions, you can decide whether you want to treat yourself to luxuries, or you want to save them up and then look for another investment to put that money into. I would also say read everything possible. Some of it is out of the textbook and it may not make sense in the real world, but talk to people, go to meetups, go to investor meetings, go to conferences and hear the stories. But understand that if you think someone's pitching you, they are. So it's like people say to me, look, I'm looking for some investors. How do I raise equity? I said, first rule is don't ask for it. I said, if I ask for it, you're going to resist. I said, but if I tell you what I'm doing and we communicate over a period of time, you'll get comfortable. And it's about building a rapport and an element of trust with people. I would say don't make a hasty decision. Don't toss a coin and say, I'm going to invest sponsor A or sponsor B or property A or property B. Do a lot of research. It's okay to miss out on a deal and study some of the deals that you missed out on and see how they're performing to the extent you can. You might have a friend that's investing and they can tell you some of the things that went wrong on some of their investments or about the successful ones. We're never too old to learn, and myself included. And my kids who are in college say, I can't believe you still go to all these seminars. I said, yeah, because there's always something to learn. Especially today, figuring out how AI and automation figures into all of this. So do a lot of research, ask a lot of questions. There are a lot of books that have been written, some by sponsors and syndicators. Don't fall into the trap just because someone wrote a book that means they're an expert. That just means they've been lucky. And I went to a conference and I got up on the stage and I asked the question and I said, how many people here think they're lucky? How many people here think they're smart? I said, well, let me tell you the story about Lucky and Smart, two brothers. and they were amazed. A lot of what happens is luck in life, and it's based on education and decisions. But you can't tell me there's nothing guaranteed. So if a sponsor is advertised, the return is guaranteed. First of all, it's against the law, against securities law. And if it's guaranteed, it's not happening. Unless there's an insurance policy or some other financial vehicle, and no one's offering you that. So just be careful out there.
All right, guys, be careful out there. We definitely want you guys to succeed, and you've heard it here first. Now, you said one thing that I really caught, educate yourself. And always educate yourself. But one thing that I remember that you also mentioned to me when we spoke some time ago, you said you should never claim to be the smartest person in the room. And I was like, whoa, you're going to have to stop there because this is going to be good for the podcast. And I want to get to know from you, why should you never claim to be the smartest person in the room? I think a lot of people will be like, yeah, walk into a room, I want to actually take on their title. Maybe people will respect me. People will think of me this way. But you said that's not something you should do. And why is that, Irwin?
Because chances are, even if you might think you are or hope you are, that you're not. So I find that being humble is going to get you a lot further in life than trying to be the arrogant expert. People that think they are the smartest people or have all the answers tend to have an attitude, and it's easier to have personal relationships and talk to people without having that shell around you. And there's always something you can learn. And I look at what some of these sponsors are doing and how they're so focused on one asset class or only on things like that. And I'm like, dude, if you diversified your fund and you bought some industrial and some other things other than multifamily, I think your cash distributions would be higher to your investors. I understand why people look at housing as the golden child. You can't sleep on the internet. You really need a bed to put your head on. But I don't think what anybody counted on was interest rates or operating expenses or insurance increasing. And no one really thinks long term that how much of a rent increase over time can a tenant absorb? What percentage of your income? And that's why in some properties, as you continue to move rents, you have more turnover. So that's another thing that you should look up. Here's an interesting exercise for anyone that wants to invest.
Yeah.
Look up online. Some of this is public data. How many times the property has traded owners in the last 12 or 15 years? Price increases. So you'll know if it's been flipped a few times. If it hasn't been flipped and they're telling you that, well, this guy's owned it for 15 years and 70% of the kitchens and bathrooms are original, and you can verify that, it might be a good opportunity if you could find enough tenants that can pay that big rent increase. But, if you see it's traded 3 or 4 times over the last 15 years, what's the difference in the rents and the quality of the finish and how we look at a lot of stuff. We still do look at apartments for investment. We looked at one that was being sold at a big discount of 180,000 per unit, and he was trying to sell it for 110,000 a unit. So only because the reason he was trying to sell it is so he didn't have a Freddie Mac foreclosure on his record. It was assume my mortgage and give me $1 million cash. And when you really looked into it, the interest rate cap expired. It was $1 million for a new interest rate cap. Plus, you needed capital to renovate the units. And I'm looking at the interior of the units, what they call a renovated unit. I'm like, God, that's old Formica. That's old kitchen cabinets. I said, I can't believe you get rent for that stuff. So take a good look. And if it's close to you, maybe you go look at it and see who lives there. And we still do this. I like to see who lives there. I might go on a Sunday in the morning, even though I'm not going to officially tour with a broker or somebody else on a Monday morning. I want to see who lives there. I want to see what kind of activity. I want to see who my tenants are. That'll give you a good idea of who lives there, what you think they might be able to afford in rent.
Well, Irwin, one thing that I just wish we had more of is just the time, because I believe that there's so much that you have to share. There's so much that I think people really need to know so they can make the smart decisions and the best decisions. But, maybe we might have you back on the podcast soon. I'm really hoping that's something that we can get done. But to everyone else out there, there's people that are like, wow, I need to know more, Irwin. How can I get in contact with Irwin? How can we get in contact with you?
Sure, we have that's fine. Our new website is up. It's heritagegroupcapital.com, all one word. We have some educational material on there on what we look for and how we choose and how we finance and why we don't take a lot of leverage, just the philosophy behind what we do. We also will be, coming out with our funds. The first time we're actually raising capital, because there are very few buyers. Everybody's sort of putting Band-Aids on themselves. People come to us and say, hey, we saw you own this building down the street. Do you want to buy this one? So even the brokers are calling me that said, look, this deal didn't sell last year. What do you want to do? And you can almost name your price in a lot of things. I've even said to some sellers, look, I want you to hold the $5 million second mortgage, and they're willing to do it. So it's really interesting. So you can go to the website, you can sign up for the newsletter. When we do go out to have an offering, you will get notified of it if it's something you might want to invest in. But I'm happy to answer some questions, but there is a lot of educational data on the website. And sure, I'd love to come back in a couple months. We'll see what's going on in the market. Hopefully by then the Federal Reserve has made at least one interest rate cut, and we'll see what effect that is on the market. But I'd say read, the New York Times, read Barron's, read Wall Street Journal.
Okay. Well, guys, you've heard it. That's heritagegroupcapital.com. So there's heritagegroupcapital.com. I want to make sure we don't mix this up. Guys, you will get it all in the description.
Yeah, they can also put my name into the search bar at Google. You'll find me.
Yeah, so just search Irwin Boris and you definitely get to find him and get more information. Well, it's been amazing and I really enjoyed this. And if this added value to you and you feel like you've been helped, please share it with a friend. Share it with a friend that's trying to get into investment. Share it to a friend that's trying to, get a sponsor. This will definitely change, I would say, your life. It'll help you make better financial decisions.